Bitcoin's pullback has everyone questioning what comes next. Everyone feels uneasy right now, and it looks like the energy's gone. But that silence always means something deeper. Not to mention, this correction was so minimal, people need to calm down. Because underneath all of this drama on the surface and disbelief, the same early signs that have triggered every major rally since 2023 are starting to reappear. We also see whales are buying, liquidity is returning, and the structure looks ready. So in today's episode, we're breaking down why this moment feels heavy, what's actually building, what's going on, and why disbelief always comes before the run. So stick around until the very end because I'm going to show you one part of the market and one project in particular quietly preparing for a breakout while everyone else is too distracted and fearful to notice. So let's start. All right, as we get started, I'm sure we all remember what went down just a few weeks ago. The October flush wiped out roughly $244 million in long positions in a single day. It was a massive reset, the kind that clears the board before new capital steps in. And right after the dust settled, wallets holding over 10,000 Bitcoin doubled their position, adding around 36,000 Bitcoin between October 24th and November 7th. So that's big money, quietly buying while everyone else just froze and paralyzed. And it wasn't just the whales, short-term holders. People who've held Bitcoin for less than 5 months now control 5.4 million Bitcoin, up from the 4.3 million. Fresh demand is flowing back into the market, guys. And here's the kicker. The supply of Bitcoin on exchanges just hit an all-time low. Fewer coins on exchanges means less inventory for buyers to chase. And when the shelves are empty, it doesn't take much to move prices higher. In every single cycle, this quiet phase of accumulation has been the springboard for the next major run up. All right, now let's switch gears and talk about liquidity. The US government shutdown we know is on the brink of ending. The Senate just passed a bill to reopen Washington, a move that will unlock billions of dollars currently frozen in federal accounts once it's fully approved. Those funds are already being positioned to flow back into the economy. And at the same time, the Federal Reserve is wrapping up its tightening cycle in just a few weeks. Once the Fed stops draining cash, global markets can finally breathe again. This shift is one of the key reasons capital is slowly returning to risk assets. Here's something big that slipped under most people's radar. The US Treasury and the IRS have just approved crypto investment products to stake digital assets and share staking rewards with investors. So for the first time, people can earn yield through regulated products, a benefit that was once limited to on-chain users. Moves like this show policy and innovation beginning to align. And when those two forces connect, markets often turn quicker than anyone expects. So now let's shift gears and talk about the rotation happening from Bitcoin to Ethereum and beyond. So what are these signs of rotation? Well, Bitcoin's dominance just hit resistance and was rejected at its 50-week moving average. This same level has marked the beginning of altcoin rotations in every prior cycle. Ethereum's performance compared to Bitcoin has been sliding for months, but it's starting to stabilize. When dominance tops out, capital usually begins shifting, first into ETH, then into the strongest altcoins. And here's an amazing sign of conviction. Tom Lee just bought another $389 million worth of Ethereum. And his firm, Bitmine, added 110,000 Ethereum this past week alone, despite the price dip, despite the price volatility. And this is how we should be too when it comes to accumulating more Bitcoin, Ethereum, Solana, Sui. Not that I'm supposed to give financial advice, but just look at the news. Just look at what I cover in every single video, and you would understand why. Do you think someone like Tom Lee would be just throwing his money away? No, he's investing it into Ethereum very strategically because of the future, because of the conversations he's having, because of his circle of friends and investors and what they tell him and what they know. So now BitMine's total holdings are more than $12 billion worth. So it's another massive accumulation coming right after the market's correction, showing how confident he is, as I was saying, that the next phase is near. So you can't get caught up in $3,000 dips or even a 10% dip, 15% dip in the market. Meanwhile, we see that Vivek Ramaswamy, who ran for president, and his fund called Strive purchased over 1,500 Bitcoin, equivalent to $162 million. And CleanSpark raised $1.15 billion to expand its Bitcoin mining and AI data center infrastructure. And why, once again? Because they know these assets are the future gold of the world, the future infrastructure of the world. That's why they're not shaken by little moves in the market. So we really need to mature as investors. Do our own research. Yes, always don't take what I say for granted, but you don't have to. I'm simply connecting dots for you. Everything that I bring you in my videos, you will find across major news sources. We have to be steady and strong in our strategy and our conviction in knowing what we're holding. We now see institutional conviction visible across every layer: Bitcoin, Ethereum, infrastructure protocols, and even energy. And historically, Bitcoin leads, Ethereum confirms, and the rest of the market follows. The same rhythm is starting to play out again right now for us. And one of the most telling signs I always find now, having this be my second bull run, I entered crypto right before the last bull run in 2018, is what happens during bear markets. Because during bear markets, not that saying that we're in a bear market, but we've been in a general time frame of sideways trending with some corrections, generally moving up though, is when builders are building. You need to pay attention to who is rolling out product, who continues with partnerships, who is not fazed by the price and keeps going. Because those companies and those crypto projects, they have legs. They have real teams, they have real treasuries, they have real strategies in place, they have a real service offering to offer the world. And it's those projects that do the best during the bull market, during the tops. And that's what we see going on right now. And one of the biggest examples of this comes from Uniswap, crypto's most used decentralized exchange. So this is very, very good news, very much so welcomed news. Uniswap is essentially like the stock market, but for crypto. It's where people can trade tokens directly on chain. Anyway, after years of operating without direct rewards for its token holders, Uniswap just introduced a new governance proposal called the fee switch. If approved, a portion of trading fees would go towards buying back and burning their Uni token, which would increase the value for all its holders. So this update would make Uni one of the first major DeFi tokens to generate real revenue from its own activity. And the idea has caught fire fast. Analysts estimate Uniswap could bring in more than $100 million in annual protocol revenue across its platforms. If those numbers hold, Uni would rank among the top DeFi projects by on-chain income. Many are already calling it one of the most important proposals in DeFi history. So we see innovation is coming back to life. Clean energy, AI, and DeFi are all converging again. And these are the kinds of shifts that usually spark the next wave of adoption. And we see Washington is finally moving again too. The same week the government began reopening, thank God, the Senate Agricultural Committee released a draft of the new crypto market structure bill. The proposal clearly defines which digital assets qualify as commodities, which fall under securities law, and how the CFTC will oversee spot crypto markets. So for the first time, investors can see real structure, clear rules as we've been asking for, stronger oversight, and less gray area for institutional capital to enter. So now that the SEC is back at work, the ETF review pipeline is reopening as well. There are more than 10 filings, each for Solana and XRP, plus a few for Litecoin and Avalanche. If even one of these advance, it signals altcoin exposure is becoming part of mainstream finance. So with the market structure bill moving forward, staking approvals underway, and ETF reviews resuming, regulation is finally turning constructive after years of uncertainty. Policy momentum is shifting in crypto's favor. And when clarity replaces confusion, markets don't hesitate for long. We know markets don't like uncertainty, they like certainty. And that's what we're getting. Next, every cycle, if you've been around, has the same sort of psychological moment. Investors start second guessing themselves, as we've seen everywhere, waiting for like 100% confirmation that never feels obvious. You can see the pattern everywhere. Take gold, for example. When it hit a blow-off top mid-October, people in Australia were literally lining up to buy it, and in China, I believe. And after gold saw an 11% correction, those lines disappeared, even though prices bounced 5% off the lows. This is how people behave in markets. This is why you can't base your decision off of their cumulative actions, which are reflected through the charts. When things feel safe, they rush in. When prices drop and opportunity appears, they vanish. And right now, crypto is moving through the same disbelief phase. Sentiment is quiet, traders are waiting for a signal, and yet all the signs are already there. This is where conviction matters. The biggest moves often begin when confidence feels the hardest thing to find and hold on to. So as we close out today's video, here's where we are right now. We see liquidity is returning. Institutions are scaling in strategically, as should we. We also see builders are shipping real updates, extremely good sign. And even DeFi giants like Uniswap are evolving with proposals that bring new energy back on chain. A regulation we see is also finally opening doors for innovation and capital to move freely again. We're sitting in the calm space between reset and acceleration. The charts point to strength, the data shows accumulation, and history suggests expansion follows this stage. If this breakdown today helped you see the bigger picture, like the video and share it with someone who needs to see the big picture. And subscribe if you haven't already so you always know when I drop a video. I love you guys so much. Stay steady. Remember, momentum is building, and this is the moment to be watching closely. So don't miss my next video. Catch you guys here tomorrow too.